Well, good morning, everyone. It's Thomas Montgomery here. It's Tuesday morning, June 7th, 2022, and we get together with our distribution partners most weekday mornings. We have pretty much two types of distribution partners. There's a few variances, but probably best described as white label partners versus referral partners. And almost all of our white label partners are also referral partners, but not all referral partners are white label partners. The page I'm sharing with you here is our white label page, and many of you are familiar with it, but I just want to give a very quick orientation on it if you're a new white label partner. And then we're going to dig into some compliance topics, because over the weekend, they did a compliance audit and for our current white label partners, but we'll come back to that. If you're a new white label partner, what happens is you either sign up either online, accepting the terms and conditions, and or the white label Adobe. And then what should happen after that is we send you an onboarding email with some specific next steps. And then several weeks ago, we started implementing also a live welcome call, where one of our staff will reach out, call the new white label partner, thank them for signing up, and frankly, encouraging them to look at the white label partner onboarding email. One of the key elements, well, there's a few key elements in the white label partner onboarding email, one of which is to get a call scheduled with Scott Stroud, our Chief Marketing Officer, to talk about automation and techniques and leads and such. Another is to schedule an onboarding call with me. Another action step is to get over here to iimfl.org, the white label page, and go through the training videos. There's a fair number of training videos, I realize, but the white label partner program, even though there's no upfront cost to enroll, it is designed to assist white label partners in generating truly $100,000 a month, predicated off of 8 client enrollments per month, 2 a week. And so we give a 30-day kind of a ramp up time, but it is important to recognize if you're a white label partner, you promised to be active, not to be a dabbler. Referral partners can kind of be a dabbler. It's like, oh, I'll refer someone, but maybe not someone for a while. White label partners are committed. We're committed to them. They're committed to us. And the commitment is to help at least 8 clients a month. Well, that's what the compliance team did, is they went through and reviewed, and there are some of our white label partners that are not referring that volume. And so we want to help those white label partners get back in compliance. Otherwise, there's a default of the agreement. Now, we have some white label partners that say, well, I'm in the wrong seat. I don't want to be a white label partner anymore. I want to switch over to a referral partner, so that paperwork can be done. But if you're going to remain a white label partner, which is the higher level of involvement, and of course, the higher level of income, then we need to make sure that we're compliant. And so compliance starts with helping at least 8 clients a month. And I think that's section 2.1 or something of the agreement. Frankly, I don't have that memorized. So if you're not compliant, then you'll be contacted regarding that and say, hey, let's figure out what the problem is, and let's get you back in compliance. Let's help at least 8 people this month. If not, again, there's a default of that agreement. New white label partners are encouraged to watch these training videos, and each are around 30 minutes long. But it culminates in the very basic understanding of how does a white label partner submit a client. Now, we've talked about the direct approach and the hybrid, and we're going to go through those briefly again. The direct approach is you come over here under the white label partner resources, you click on this link. It allows you to download a Word document. And so that's the agreement that you would have signed between you and the client. Because as a white label partner, the clients are signed with you, not with us. And so then you modify this to the extent that you want to, with terms and conditions changes if desired. what you want your fee structure to be. Do you want the deposit to be refundable or non-refundable? Do you want the performance fee to be high, medium, or low? Those are all your choices. Once you have that agreement done, then you're ready, you're open for business. Now we're ready to start enrolling clients. And so you can either send the agreement to clients for them to sign via DocuSign or Adobe. You can work with Scott or do it on your own. Scott Stroud, our Chief Marketing Officer, to set it up as online terms and conditions. It's up to you. But once the client is signed with you, then you submit them right here. And so this is an order form, if you will. So this means we are ready to implement. So as a white label partner, you put this information in. You do not, again, do not send your clients to fill this form out. You secure the client agreement between you and them, and then you submit this form. And so then once this is submitted in, well, we'll go through it. So client's first name, last name, pretty obvious. Client's email, also obvious. You need to list yourself because this is not a customized form to you, but you're the only one, or you or someone on your staff's the only ones that's going to be filling this out. The difference between these two is real simple. Access to capital means that the client does not pay anything until after their first tranche of financing, until after their first capital raise. Then they get the money, and then they pay you the deposit and whatever performance fee is earned. Capital Ready, it's the same program, but they're actually paying you the deposit up front. So there's editable agreements for both that you can use, but we encourage you to consider using the access to capital because there's no upfront fee to the client. And so now all of a sudden you're going to be able to enroll a lot more clients by having no advance fee. So then if it's capital ready, then because as a white label partner, we're doing a 50-50 revenue split. You pay nothing to sign up as a white label partner, and we do a 50-50 revenue split. Everyone loves that. So when the deposit comes in, we'll split that afterwards. Capital ready, of course, means that they've paid the deposit up front. So then that's why it's asking you the follow-up question. The follow-up question is irrelevant to access to capital. The date of submission, check the box and submit. And then what we should be doing is within 24 hours, getting that client loaded into our system. Then we'll be sending them an Adobe funding app and copying you on that. And so then you want to encourage them to fill out that simple one form page funding app. It's a very brief app. It's called an express app. Gathers a little bit of information about the business. If they're pre-formation or they don't have the business yet, that's fine. It's optional fields, and then a little bit of information about the key person or the business owner. So you'll want to, if you're a white label partner, you'll want to encourage them to complete that quickly. Then that comes into us, and then we can get them funding offers. And the funding offers are what we call the FTF, first tranche financing, because that's what they qualify for right now in the beginning. We've not yet built their loan package out, right? We've not done all that work that we're going to do to improve their credibility. It's just at the front end, what do they qualify for now? And as we've discussed many times, most clients will get 4 to 7 cash funding offers. It's rarely more than 50 to 75,000 on the first tranche, but it's going to be based on their credibility. Could it be under their business? It could be. Could it be under them individually? Again, since we've not built the full loan package out, they're not going to have the same options in the beginning that they'll have after the modules and after the loan package is built. But the goal is to get them initial funding, so you're getting paid. And so let's say the client just gets $10,000, a very nominal amount. So then the client is wired that $10,000 of FTF, of first tranche financing, and then they pay you, the white label partner, the deposit, which is stated in the agreement between you and them. Normally it's $2,500, and they'll also pay you a performance fee, which is stated in the agreement, whatever you set up. Let's just use 10% as a round number. So then if they had received $10,000, they're going to pay you $3,500. $2,500 of that is the deposit. 10% performance fee on $10,000 is 1,000. So 2,500 plus 1,000 is 3,500. So here you're cash flowing quickly. So that is mission critical there to understand those basic steps. It's described in this training, but we do have some white label partners that seem to skim or skip the training. So at least you need to know you want to get the client agreement secured, most likely using this template, and then ultimately you submit them. Now, keep in mind, when you submit them as a white label partner here, we're going to send you an invoice because we know that we're splitting the deposit, and the deposit should be at least 2,500. That puts 1,250 net, so 2,500 gross, 1,250 net into your pocket. So once a client is submitted, as I mentioned a moment ago, we'll send them the app for the funding proposal, copy you on it, and we'll invoice you $1,250. Not saying, hey, send $1,250 now. We realize you've not collected anything from the client yet. That's not the point. But you do need to recognize, if you're using QuickBooks or what have you, you have a receivable due from the client. Accounts receivable are created once that client signs the agreement. So let's say that the client, let's say you're using the standard agreement. You've not altered it too much, so I can make generic references to it. And it says $2,500 deposit. And again, we'll just use simple 10% performance fee. So you know each client is worth $12,500 of gross income to you, because they're promising to work with you to raise at least $100,000. They're promising to pay at least, or to pay a 10% performance fee off of at least $100,000. So that's $10,000 plus the 2,500 deposit, 12,500. So if you're using QuickBooks or whatever mechanism, you know that you're owed at least $12,500 for each client that has signed up. There's always a cost of doing business, and we do a 50-50 split with white label partners, which is great. So you're going to net $6,000 to $10,000 per client net, pure profit. But regardless, once you submit the client here, we'll send a QuickBooks invoice to you for our half of the deposit. It's not saying, hey, pay us now, you've not received, even though you've not received it from the client. Not at all. So in good accounting, all parties are tracking receipts and payables. So from the time the client signs with you as a white label partner, you're most likely putting into QuickBooks how much they owe you, at least $12,500. And so then you submit them here. So we know that we're going to be getting $1,250, half of the deposit. And so the QuickBooks invoice comes to you. So I don't want you to be distracted or somehow say, well, wait, you guys are expecting the white label partners to pay $1,250 out of their pocket. No, absolutely not. The client has promised to pay you. They'll pay you after their first tranche of financing. We're just getting our invoice in your hands up front, just like you may invoice them up front, even though the trigger for when it's due is not recognized yet. So hopefully that makes sense. Just it's accounting talk for keeping track of numbers. So again, as a white label partner, there are certain performance expectations, and one of which is that we help at least 8 clients a month. And so those of you that came on late, I just wanted to remind you that they did a compliance audit over the weekend. And so they're going to be reaching out to those of you that are white label partners that aren't on track, not to be hateful or harmful, not to end the relationship, but to say, hey, you're not on track. You're not participating as you promised you would. What can we do to help? You know, we have these daily trainings. We started a new one-on-one support team for our white label partners. We announced a couple times I think on May 31st, and again on June 1st. It's called our elite team. Doesn't cost anything to be an elite white label partner, but there's just that extra level of support and mentoring and coaching available. But we obviously got all these different trainings. We have the Zooms each day. We're here to help you. So why is it that a white label partner wouldn't be successful? Well, we know if at the end of the day, the goal for, well, at least our goal for white label partners is to earn right around $100,000 gross income a month. But do we just hope or gray or promise to get 100,000, or do we have to earn it? We have to earn it. So where does 100,000 come from? It comes from 8 clients that are enrolled that go through the process to pay the deposit and do the capital raise. So if we want, as a white label partner, we want cash, then we need to have conversions. And for conversions, we need leads. And so if there's an issue that you don't have enough leads, enough prospects to work with, that's the easiest to resolve. And we've done some role playing, and we can do some more, but nearly every small business owner wants and needs capital. It's funny. I was out Friday and Monday traveling to Florida. We did some workshops there. And it was interesting how so many different industries are recognizing that small businesses want and need capital. So when I opened my suitcase, I saw that my wife had packed me a new razor shaver. It was from Harry's. And I opened the box up, and guess what was wrapped? Not because my wife did it, but Harry's, that makes razor blades. Guess what they wrapped around the contents? This marketing piece about getting $100,000 for small businesses. And this is Harry's shavers, not even related to the industry that you or I are in. So there's no question that most small businesses want and need capital to start, to grow, to reach their potential. No one else has a model, a grant subsidized model like you and I have, where the small businesses come in, they're guaranteed in writing at least 100,000, and they have no upfront cost. We have a credible program that's built around a curriculum developed by the FDIC, promoted by the SBA. We have 4 great modules that we go through to help them get prepared for funding: business planning, business credit, financial management, and banking and money. They're provided a direct mentor that's working with them to put this together. There's just no reason that any of us should not be able to generate at least 8 clients a month. Now, if you don't want to generate at least 8 clients a month, you shouldn't be a white label partner, because that's our advanced model. We're not charging anyone to become a white label partner, but there is the expectations, the stated expectations and promises. We'll train you, we'll support you, we'll do a 50-50 revenue split with no investment. How do you beat that? But we need to help at least 8 clients a month. So if you're not hitting at least 8 a month, you'll be contacted here soon, not like a bad letter from the principal's office, but saying, hey, we're not on track. We either need to figure out, are you going to get on track? Can we help you? Or do you not want to continue as a white label partner? All right. So with that being said, Hannah asked a good question about the payment. And I want to go back to that because I probably didn't do a good enough job. But we need to look at both sides of the transaction. So Hannah's a white label partner. So Hannah goes out and signs up a client. Let's say that Hannah signs up Alfred. Alfred is a true distribution partner, but just a name on the list here. So Hannah is the white label partner. Hannah gets Alfred signed up to her Access to Capital program. Alfred has now said, yes, Hannah, I want you to help me get at least $100,000. And Alfred has made certain promises. Alfred has promised to pay Hannah at least $10,000, 10% of, using that round number example, of a $100,000 capital raise for performance fee. And Alfred has promised to pay Hannah $2,500 of a deposit. So does that mean Alfred owes Hannah $12,500 the day he signs up? Well, technically, yes, he owes it to her, but it's not due yet. It's based upon different triggers, right? And so Alfred shouldn't have to pay anything until after his first tranche of financing. And that's when he would pay Hannah the deposit, which should happen in 5 to 7 days after enrollment. And then as different tranches of capital are funded, then Alfred will continue to pay a performance fee to Hannah. So Hannah's question wasn't anything about that. It was about the 12.5. And so We will invoice you once you submit a client, if you're a white label partner, but the $1,250 isn't due until the client pays you. They receive their first tranche of financing. So it's not triggered off of a certain number of days. It's triggered off of an event that says, okay, you agree, while you can set whatever deposit you want for the clients, it should be at least 2,500, and we'll split it 50-50, 1,250, 1,250 apiece. And so we're just bringing your attention to that, because this will shock you. Probably, maybe it won't, but it may shock you. We've had some white label partners that just drive people in here and then they do nothing. And so then we're incurring time and effort and they just drop the ball. And so there are expectations of white label partners. It's of course stated in the agreement. We're here to, it's stated in the training, we're here to support, but the short answer to Hannah's question is the $1,250 would be paid after the client has paid you, as stated in the agreement. So it's not putting the white label partner in an upside down financial position. It's just saying, hey, you remember, you do owe this for this client you submitted, but you're not going to forget that, right? Because this client owes you most likely 10,000 plus. Just the triggers haven't occurred yet. I hope you can understand that. We don't all live in a cash society. A cash society is if you just go to the flea market and you don't have contracts, you don't have agreements, but you give them $5, you buy the pretzel, right? It's just a cash transaction. That's very simple, but that's not the way the financial world works. The financial world works with agreements and commitments. And so these folks are agreeing to work with you to raise at least 100,000. They're promising to pay you at least 10,000 of a performance fee off of that. Now, is it due yet? No, it's not due yet. The triggers are within the agreement. In other words, as they raise capital, then they pay you, but it is a receivable. So for every receivable to you, it's a payable to someone else. So in our example, if Hannah signs an agreement with Alfred, our example for before, Hannah has let's just say $12,500 receivable from Alfred, but Alfred has a $12,500 payable to Hannah, right? There's two sides of the accounting equation. Well, in our white label partnership, when Hannah has a receivable coming in from Alfred for $2,500, she knows that we're going to split that 50-50. So she also posts a payable to her QuickBooks. Well, what's a payable to Hannah is a receivable to us in this transaction. And so then we're posting a $1,250 receivable. And by getting that invoice, Hannah can post the payable. So hopefully that makes sense. It's not complicated, but it's just, as we teach in the 27 mistake training video, we need to run a business like a business, and that's properly tracking revenue, receivables, and so forth. So hopefully that was clear. It shouldn't be alarming. It's just the manifestation of the financial terms that we've agreed to. The primary goal I wanted to have today, is just to alert you. If you want to be a white label partner, that's awesome. You can become one. It's simple. You pay nothing up front, and you can do that here. And there's a few other portals. Once you become a white label partner, we'll train you, we'll support you. There's just no reason that you can't help at least 8 clients a month. And helping 8 clients a month should translate into right at $100,000 of gross income. And that's an honorable income, right? There's a lot of businesses that do not bring in $1.2 million a year, which of course is 100,000 times 12. It's not too good to be true. It's very attainable, but we need to help at least 8 clients a month. If you are a white label partner and you're not helping at least 8 clients a month after that first month grace period, then we're out of compliance. We need to figure out why. Have you just changed your mind? You don't want to do it anymore? Is it you're having trouble with leads? We need to figure that out. So who has any questions regarding the white label program page, the training resources, the agreement template? to use with the client, the white label submission process. All right, Charles is asking regarding the hybrid approach. So let's go ahead and go to the hybrid approach. Not meant to confuse anyone, but Charles is accurate. There's another way that you can do this as a white label partner, and this is called the hybrid. The hybrid is you come over to 4weekfunding.org. You also become a referral partner, which is fine, didn't cost you anything. And there are no performance requirements or expectations as a referral partner. You fill this form out, click yes, hit the blue, system will generate a referral link. You'll get a page that looks just like this, but it'll be your own URL. If you're doing the hybrid approach, so it'll look just like this, then you'll drive prospects to this page, your landing page. They'll fill this out. It's linked automatically to you. Then we'll begin working with them through the 4 modules. It's the same modules that we talked about over here. But if they come through the hybrid approach, then we'll do the mentoring. You're not burdened with doing the mentoring. And then at any point during that 4-week process, you as a white label partner can follow up with them. You'll be notified. You're notified when they enroll. And so then if you're a white label partner using the hybrid approach, then essentially you pivot them over to your agreement, same agreement, somewhere during that 28-day process. And I'll give you the simple script, and you'll convert 100% or 99.9% of them. So let's use a different example. We have Joseph on, and Joseph we talk about all the time. He's one of our top white label partners. He's also a licensed realtor out of Arkansas. But let's just assume Joseph is a client. He was referred in by a white label partner on the hybrid approach here. And so let's see, he was referred in by Lon. Lon is a white label partner. And in this example, Lon referred Joseph. Lon's using the hybrid approach. So he referred Joseph to this page, but Lon's unique URL. Joseph, of course, signed up because it's free. It's 100% grant subsidized, high conversion rate. Lon knows that Joseph signed up because he's notified. At any point during the 4-week process that we're doing internally doing the mentoring, Lon's not burdened with that. He can reach out to Joseph, the client, and say, hey, Joseph, I see that you're currently in the free 4-week funding program. How's it going? And he doesn't have to be real intrusive, but it will be effective, of course, in just congratulating the client on their decision. Almost always the client's going to have great responses. Oh, this is awesome. This is so much needed. I didn't even know what I didn't know, whatever. But here's the pitch. Then Lon, in this example, the white label partner to the client using the hybrid approach can say, well, hey, Joseph, while you're going through the free 4-week funding program, we can go ahead and see what you qualify for now for your first tranche of financing. So Joseph, would you like to go ahead and see what type of funding you can get now while you're still going through the 4-week process? What's going to happen? 9 times out of 10, the client, in this case, Joseph's going to say, well, hell yeah, let's see what I can get now. So what would happen? Then Lon would get Joseph under agreement of the access to capital. He would use the template, send it to him, DocuSign, Adobe, online terms and conditions, however he wants to do it. Then what would Lon do? Then Lon would submit Joseph information here. Then we're going to send Joseph, in this example, the client, the funding proposal app, and get funding offers for Joseph immediately rather than waiting for the 4 weeks. So the hybrid approach might work well for you if you as a white label partner don't want to do the mentoring, so you don't have to take people through the lessons, and you want the simplest possible pitch, because getting people to go through 100% grant subsidized, it's free. There's $0 cost. We don't ask them for any payment. Free. Driving people into this, where you get a free landing page, get the little video, it's golden, right? And then you can convert them or upsell them, if you will, during that 4-week process. And at that point, bring them into your access to capital. That's called the hybrid approach. So you can go direct, which is what we talked about most of the call, or the hybrid is bring them in here and then pivot them over sometime during that 28-day process with the incentive to say, let's get your funding offers now, even while we're going through the 28-day process. All right, so let's go through any final questions and we'll wrap up. So Veronica says her problem is getting access to the agreement template. That's weird. So let's figure that out. So she says she took the referral partner. Okay, so she's a, well, I don't think I understand, Veronica, what you're saying, so I won't read it out loud, because if I don't understand it, I can't answer it and it might confuse others. But yeah, if you need help clicking on this and opening it, let us know. But as long as you have Microsoft Word on your device, you should be good to go. And well, I'll leave it at that. Yeah, so you got to remember, we have daily Zoom calls. You can always schedule calls. You can call in, talk to Madison, the funding coordinator. She's pretty much available on the fly. We have a lot of committed time and resources to help our white label partners be successful. But at the end of the day, and I'll close where I began, if you are a white label partner, you have promised, you've contractually committed to help at least 8 clients a month. So that should be part of your budget. You should be budgeting to bring in $100,000 a month. Now, we do a 50-50 split as through the white label partner program. You don't pay anything to become a white label partner, but we do a 50-50 revenue split. That's more revenue to you than would be if you're a referral partner only. So then we're making certain expectations. And so if you're a white label partner and you're not helping at least 8 clients a month, you're not in compliance. And so then that means that there is a financial implication to you as stated in the agreement. We don't want you to have to pay anything for defaulting on the white label partner agreement. That's not the goal. That's not the intent. What we want to do is, if you're not compliant, then we need to get compliant. But if not, then you're going to be billed for what you promised to pay if you didn't generate the minimal level of activity. Mark is asking about the RVP program, and that's exactly right. So we have regional vice presidents, which didn't cost anything, regional vice presidents, and we just had a training on that last week. They recruit teams of white label partners, and white label partners that are recruited by the RVP generates an override of 2.5 points to the RVP. We had, again, a detailed training on that. So you'll earn about $2,500 as an RVP for every client that each of your white label partners brings in. If you have a white label partner that's compliant, bringing in 8 clients a month, then you're looking at right around 8 times 2,500, which of course is 20,000 a month. So with that, if you have any other questions, let us know. But let's go implement, and we'll see you back tomorrow morning. Thanks, everyone. Bye-bye. Hi, Thomas Montgomery.